and welcome to Tambarara. My name is Happiness and I'm joined by Cornelius after a short break and Tinashe. Good morning, guys.
Hey, how are you? Good to be back.
How were the exams, Cornelius?
Quite difficult, but I think I conquered.
I'm sure you're right, buddy.
Anyway, the main story of the week is the budget that was presented yesterday by Finance Minister Mutuli Ngube. A lot of headlines have come out. We have Herald saying that it was a pro-poor budget. We had Newsday saying that it was a lifeless budget. And then we had Daily News saying that it has lifted the gloom on citizens. Do you agree with these headlines? Which one would you prefer the most? Lifeless, pro-poor, gloom lifter?
All I can really say is that it was quite uneventful in terms of our expectations and what actually came out. So, don't get me wrong, the numbers were all right. But again, nothing out of the ordinary, nothing we didn't expect. So, yeah, going on like Cornelius, anything else to say?
Yeah, because I think basically we're coming out of hyperinflation. The most important thing for next year is probably to stabilize inflation. And once you stabilize inflation, you can see real disposable incomes increasing. But I didn't really see much in terms of how they're going to tackle inflation. I just kept on seeing the same mantra. Our goal is to have price and exchange rate stability. But the way they're going to achieve that, you need to think outside of the box. If you're going to use the same strategy that you've been using, as Happy said, for the past 10 years, how do you expect to change things going forward?
Okay, so now let's go through the highlights. This was a 927.3 billion budget. They're expecting a small deficit because expenditure is about what? 854 billion?
Yeah.
And that's a $75 billion deficit. 25% of that will be funded through SDRs because they put 145 million US as the amount in the fiscal statement. I'm not a big fan of government debt. We already have quite a bit. In the private sector, we need the capital to invest. And what we do need now is recapitalization of banks in order to release loans, decrease the real interest rates, which will allow us to send out properly throughout the economy, stimulate business, stimulate production, stimulate business. I'm not a big fan of the deficit spending, but it's what we can expect.
You say we all can have a deficit. But if you look at the priorities for this year, besides agriculture and social services, you're looking to infrastructure development, job creation, and localize the universal packages. We can sort of break down the value, sort of deficit in the long run. Surely that's a positive factor to look at.
I think my worry with the infrastructure spending is that, for example, road rehabilitation, it does require imports in the form of bitumen. And for you to import bitumen, you need US dollars. So you use the US dollars to get the bitumen, and then you're spending the ZWL locally for your other, expenses like wages and everything else needed within the economy. So you have oversupply of ZWL, and you have under supply of USD in the economy, which puts more strain on the ocean system.
Is that so? I thought they said that they actually have enough foreign currency, and therefore he did say that there's like 630 billion US dollars that's in the economy right now that's just freely floating, which is I think a lot of money. Plus they've got also SDRs that are there, and from that allocation 311 million US dollars that's going to be used over 3 years. I think a third of that is going to road rehabilitation. So there's enough foreign currency there. But I think what the budget did address was that exchange rate stability. I think you pointed it out correctly, and how they're going to ease inflation pressures when the world over, even big countries like UK, US are crying about inflation.
No, but I feel like it was very vague, but they did sort of try and address the idea of the financial markets and inflation. I'm telling you again, they seem very optimistic about how financial markets are going to work in general. And like what his words?
Yeah.
In short, the financial sector is stable and sound right across the banking sector, capital markets, and insurance sector. Surely from his words, is that not a positive note in terms of how we're going to move forward in 2022?
And just to add on this point as well, we currently stand at an annual inflation of about 54%. The policy rate is 40%. So banks would generally charge about 60% for corporate loans, which means we have interest rates that are higher than inflation. which is always good for real interest rates. Before we had a situation whereby real interest rates were decreasing on a every note. So I think it's a good point to be. It's a good point to be at the moment.
Okay, so let's go to the other key highlights, the tax issues, revenue enhancing measures.
I thought that was a good point in terms of the tax relief. The one thing I thought was most important, especially to all our viewers, was the increase of the threshold of the income of minimum tax from 10,000 to 25,000. I think that means an increase in the velocity of money and more disposable income in the markets. And again, I think that's a very positive impact in terms of economic growth and stability going forwards. What do you guys think?
Anyway, so for the average worker, yes, I think that was a good thing, 25,000. A lot of people are on 25,000, like a doctor would earn about 27,000, 30,000. So yes, it is a good thing. It provides some relief and then increases disposable income. And there were also the tax-free, the tax band, which were adjusted to 500,000.
Wait, there's no more tax band of
at 40%.
Yeah, just go to 40%.
But there are also taxes that were introduced as they tried to raise money. So you could tell that government is like on a hard place at the moment because they did introduce these taxes, the 5 cents tax on energy drinks, and then excise duty going up to 25% plus US dollars, plus $5 and for 1,000 cigarettes.
Yeah, I think that was more just an incentive to sort of appease people. The reason they introduced the tax for energy drinks and increased the levy on cigarettes, well, they said that money's going to be funneled towards healthcare for people with, hypertension.
Even the airtime levy was like a health fund of sorts, but nobody has really accounted for that. How do you account for something? Let's say, for example, the increase in the motor insurance, that premium, they're now taking 20% premium on the motor insurance pool and then just putting it into the consolidated revenue fund to compensate accident victims. How do you do that? Who's going to account for that? Because it's in your consolidated fund. So how do you know if that has been used? It's not even ring-fenced. It's just going into the fund. So it's just them just trying to tax people and then putting it into the consolidated fund. And then there's no accountability. How do we fight non-communicable diseases like BP? Do we even have stats for that? Diabetes and stuff? Or it's just a way to raise money and to raise taxes?
Yeah, even the withholding tax on shares increased to 1.5% on shares that are out for a minimum period of 6 months, and shares out for a period of less than 6 months will be subject to a withholding tax of 2%. The previous regime was a flat 1%. I think they're just trying to tap into the stock market gains that we've seen over the past 2 or so years, which is a clever move for government, but a sort of disincentive for your active institutional investors will be hit hard with that 2%. Because they trade on a daily basis and they trade large chunks. But for the longer term investors who can afford to wait longer to take out their money, I think through capital appreciation it will soften the blow that they experience from a 1.5% tax. But I do think it disincentivizes institutional investors, which we as brokers really need in the market.
Yeah, but I think just again on that note that both you and Happy brought up in terms of just the government trying to raise money through taxes and levies. I don't know if you guys noticed this, but you guys hear about the new tax on new phones?
Yeah,
where if you don't pay your tax on phones, network providers are obligated to charge you $50, and then if they see that your phone has been paid tax on, then they refund you. I mean, again, it's a clear indication that the government is just trying to find ways to fund themselves and meet this next.
they're raising money.
They're raising money.
But then some of that, it's impossible to implement. I don't think stockbrokers have the systems in place to be able to know when shares have been bought, and it complicates structures because now you've got to install a system that's connected to the tax collecting agency, and that just puts chaos. But I think when they do announce a budget, it's not set in stone. It can always be lobbied for and against. So because there is no effective date, I think there is a chance for the market to lobby against this. to even have it's better to just have a flat rate like what was there previously and not to have like a 6 months on this 6 months because it's totally chaotic. Even on the phones, how are they going to implement it? Because it's like when you do put a new phone, it's supposed to register on the network, which means systems have got to be updated, and I don't think companies are in a position to be doing that. So that's chaotic and doesn't make sense at all. But this is a government that's desperate for money. They're desperate to raise money wherever that they can. So let's talk about the other levy that they imposed, the 5% on dairy.
I think that doesn't make any sense at all. If you look at dairy, especially in this country, it's got a weak substitution effect, very low elasticity. I feel like implying a new levy, especially on dairy, is just going to imply, a tax on the everyday buyer, especially if you don't impose an incentive for producers to, produce the things people are importing. You're really not doing anything as a country, you know what I mean? So what really is this going to lead to?
And the only way to overcome price elasticity is with serious cost overhauls and price competition, which, of course, in our space, Dairy Board, as a listed company, is the one we expect to take advantage of this. They have signed a recent strategic partnership with Tambarara Estates, which they've been trying to do for the past 2 or so years. And right now, it's just speculation, but hopefully, this will increase the volumes of raw milk production, reducing the cost per unit and allowing them to maybe have more competitive pricing, and then this 5% import levy can then come into the fore and helping in terms of demand. But as for now, I agree with Tinashe. It's milk. At the end of the day, it's a price they like.
People are going to buy milk.
People are going to buy milk
So
regardless.
we can still substitute. There's more, but it's still milk anyway, and we can still just drop milk. There are a lot of guys who don't take milk, but anyway. So moving on, inflation targets, they're now focusing an upper end inflation, annual inflation of 58%. But judging from the figures that came out this week, inflation is already at 58%, which means it has to come down significantly in December to about 51-52%. That's highly unlikely because of adjustments that have been made to prices. Because of also the global inflation influence.
I think just if you look at all our estimates for inflation and what we project for the future, we've constantly been underlying underpricing what we think inflation is going to be. We say it's going to be 50%. The month comes in and year to date it will be 55%. So I mean, it's one of those, you look at their projections and you have to consider the fact that we've never really matched our projections to actual figures. So I mean, can we really take the predictions and actually look at them realistically?
Yeah, because in the day they're targets, and essentially what's happening now, inflation is decreasing. It is increasing, but at a decreasing rate. So there is a sense of stabilization. They decreased the reserve money growth from 20% per quarter to 10% per quarter, which is in line with regional standards. And they've also allowed the bank rate to devalue gradually, which at first I disagreed with Happy on it, but I do think it does make some sense. But we still are oscillating between a circa 80% and 90% difference between bank rate and the parallel market. So there is still, some issues that need to be dealt with, such as the disbursement of funds through the auction system, which is still a major issue because that's the source of US dollar, and that's what will stop producers from going to the black market and putting pressure on the price. So that's something they need to deal with. And I didn't see much of that in here. I know that's more monetary policy, but we would like to have more clarification on the things that really matter.
Yeah. And the biggest story for me was the 3.3 billion debt assumption by government of the legacy debt from RBZ. So there's a bit of background to this legacy debt. This was money that was always in queue when the bond notes and the bond notes were introduced. So from 2016, there was a forex backlog. The same way we're experiencing now with the auction. That's when problems with the forex started. And then there was a long waiting queue for foreign payments. This is the debt that is being taken over by government. We're going to see this again in the next 3 years. They'll take over the auction backlog. Okay. So it's the same cycle.
No, again, I remember Keisha was saying last week, this is just a quick fix.
Yeah.
I mean, it's nothing permanent. It's one thing they're going to do over and over and over again. But again, it's nothing permanent. It doesn't look like a long-term plan. It's just something they came up with. Again, quick fix, and I don't see it, going off the long run.
But then that also means that government will have to issue TBs in US dollars in order to repay that. And then to repay companies that are still in queue. We know PPC are always talking about it. NAMPAC is always talking about it. Even Delta is always talking about it. So you're going to have to issue TBs in US dollars.
Can they do
Then
that,
they can. 2-3 years down the line, you say this is in dollars, and then you've de-dollarized again. And then what wasn't clear about the budget was the de-dollarization plan. It didn't come out clearly. Instead, they entrenched the use of the US dollars. At some instances, when you do look at the figures, they're actually using a rate of 130, which is not their official rate. But then it wasn't clear. They had more US dollar taxes that they're giving US dollar options. At a time when government should be promoting use of the local currency, they're actually saying move to the US dollar.
Yeah, which was a bit surprised listening to the budget yesterday. Because of about a month ago, Mtumbe came out saying he doesn't want to dollarize. He wants people to sustain confidence in the dollar. He might bring the US dollar as just a facilitator, but realistically, he wants people to build confidence in ZWL. So that idea of moving towards the USD was a bit sort of, they don't quite meet up with what he had said literally a couple months ago. So.
And then, I told about policy consistency, because you can't announce that you're going to issue $100 million worth of bonds in the VFX, yet you're also talking about de-dollarization. If I buy the USD bond, now I'm like, okay, maybe I can wake up tomorrow and we're now back to $0. My coupon payment's worth anything anymore.
So it's policy predictability. Nobody knows what they're going to do tomorrow.
Yeah.
So we move on to industry support. We had a lot of articles out on what industry wants. Industry wants support. Did they get the support in this budget?
Just on that note, first of all, I talk about the pre-budget proposals.
Yeah.
In total, all the ministries together decided they want about 2.7 trillion ZWL. And with a massive 927 billion budget, that's about only 34% of what the industries wanted. So reasonably, I don't see any ministries really meeting their objectives and proposals, and they don't be surprised if next year, we realize that what governments and ministries plans doesn't come to fruition. But
have they ever had, like historically,
I mean,
the ministries get what they want? They've never, even the world over.
How often has it been this 34%?
It has been worse than that. The world over.
These are proposals. Basically, you're trying your luck.
Your wish list.
It
doesn't really need to be met.
There's the idea of subdivision. Say, for example, I think transportation got about 60 billion. They have to spread that between road rehabilitation, railways, airports, recapitalizing Air Zimbabwe. So that money is not going to come to anything really.
No, it's not. Which is why, just like with financial results, it's also just pointless looking at the allocations, the votes on. It's pointless. What they did right, and that's worth making noise about, is to match the budget declarations on health allocation at 14.9, which is the first time in a very long time that we've actually matched the 15% requirement on the budget declaration on making 15% of your budget go towards health. Are they going to get the money? No. It's an election year next year. So it's not so much about the figures that we need to look at. It's not so much. And I really would have wished that this budget, more than anything, was long on policy and not so much about money, because we know that it can just be what they've been doing even for this past year was redirecting money that's meant for education. It's been going to the roads because we're heading towards election season. They need to campaign based on infrastructure development. Money possibly that's meant for mines has been directed to. And
that's another point.
Yeah.
I didn't see, so the industry support, I didn't see anything material on mining. The mining sector has been the biggest complainants.
Mining's at about 3 billion budgets compared to education, primary education, 124 billion.
Yeah, but we need to build skills. So yes, education.
I get what when money gets
Yeah.
literally like a thousand of like what education's getting.
And our biggest generators of income is the mining sector. And they've been crying about getting that the export proceeds ring fenced in order to facilitate the ZWL costs here, using the USD to import various inputs.
I think it's
That's the
really
life
look
But
at
we had this argument here.
Yeah.
And then now the miners agree.
Yeah.
I think it's mostly just the ramifications of like what's really gonna happen with this budget going into 2022.
Yeah.
And how these industries themselves will take their allocations
Yeah.
and how they move forward with it.
The dairy industry and tourism industry have always received these rebates on equipment, but still things are not right. So, what, in your view, should government do? If you were Mutuli Ngube, let's just say, what should you do?
Do you understand?
I mean, with regard to government and the tourism sector, we have seen an indirect play by government through NASA with the purchase of RTG. They've increased their stake from 67% to 90%, and apparently the plans to delist and rehouse RTG. We don't know for who and for what purpose, but I think it's a play by government to take full control of the tourism sector and influence it through these rebates. As we saw, there was a rebate on safari vehicles.
But aren't those dead assets? Come on, look
Yeah.
at it. The Sheraton, there's the Rainbow Towers, dead assets. So why would they want to take full control when I think dynamics of the tourism industry have changed. There are new hotels coming up, even in Big Falls, there's space. They used to have Azambezi as the most exclusive space that's close to the river. That has changed. The
But
new
that's
hotels
been
now,
brought up by LTG.
it's an RTG property.
Yeah.
Yeah. So if that's the case, what do they really want to achieve?
If you privatize it, you have less public scrutiny, more restructuring, more recapitalization. You can basically redefine the business without answering to shareholders on a yearly basis.
No, but there's difference between public scrutiny and shareholder scrutiny. The public scrutiny really come based off the fact that the company is listed.
And the
I
fact
mean,
that this is
shareholders are
NASA,
public,
this is your money that you pay
Exactly.
to NASA every month. So
Yeah.
we really need to know what's going on. It has to be transparent. So even if they delist it, we'll
Yeah.
they have to be accountable for everything. I would want to speculate and say that they're warehousing these shares for someone else. I think give it time, in 3-4 months, they'll announce a new player, a new shareholder, 91% for them. We'll revisit this conversation. They're warehousing it. There's no reason why NASA would want to be involved in the hotel industry, tourism industry. Absolutely no reason at all. It doesn't make sense. The reason why did they increase their shareholding in RTG in the first place? Remember, they started out at 12%, then they increased it gradually because the Van Hoog was giving them problems, so they really had to just remove him as the majority shareholder so that decisions are easier to be made. But there's no strategic intent on their part on why they would want to delist and privatize RTG.
I mean, the one thing I'm thinking, like from an analyst point of view, is that NASA holds a lot of assets. There's a massive shareholder in quite a number of big companies that you wouldn't think they would want to get into. Maybe they just see this as a big opportunity just hold a great portfolio of assets. So maybe it's not. If maybe you think about too deeply of like why they want to buy RTG, maybe just a simple like decision where their internal analysts think let's buy RTG, because it's a great asset to hold.
Okay, because they got Rainbow Towers and the Shiti Ambassador Hotel.
And tourism is undervalued because of COVID.
Exactly.
It's going to be
And
a
there's
rebound.
a new virus that's out, a South African variant. That means it's just going to be in that cycle. You saw the UK today having that statement out that
It's back in the red
we're back on the red list. 6 African countries are
Yeah,
back on the
Microsoft
red
ones.
list. So tourism is not going to get right. Not in the first half of 2022. It's going to take some time until we've got this situation under control. So why would you want to buy?
But you don't take over a company expecting it to perform the next day or the next month or the next year.
Long-term plan.
It's a long-term plan. We're not going to have COVID for
For NASA now, that's different. We expect to see returns yearly, and we expect that portfolio to grow. So it's different. You can't just take an asset and say it's going to recover.
Right.
These are monies that people want an adjustment to their pensions. They're getting what, $30 a month? That's nothing. You can't even survive on $30 a day. And someone has to get that for a full month. So for NASA, it's different. They really need to get assets that will have a good rate of return at the shortest possible time. I will still say that they're warehousing this for someone else. So we'll talk about the next thing. That's Arden. So since it's in the same industry, Arden having a circular out on the voluntary liquidation. So we know Arden used to be Brainworks Capital, right? You guys were still at school. So Brainworks made a lot of noise about this listing when they listed on the JSE, that they're going to use that exposure and the money that they would have raised on the JSE to actually grow the business and then to grow assets elsewhere in the region. But 4 years later, this has not happened. They've sold the majority of the assets and are only left with African Sun, which again is being warehoused for sale. So we now have two assets that are just being held for sale. Your two biggest hotel groups are available for sale investments at the moment.
I mean, again, when you hold the two biggest companies in the industry, clearly strategic. There's something going on in there. You know what I mean?
No, but like I said, it has really changed. I mean, the industry has changed. So you've got Old Mutual Living, Palm River, you've got Mbano. Those are different types of hotels that are there. And then for you to be stuck with, I think in African Sun's case, with the very big Elephant Hills, and then there's still issues with the Kingdom Hotel over the lease because of what First Capital is trying to do. I don't know. I'm not very buoyant on whatever's going on.
You forget that Arden Capital is also listed on the JSE.
Well, they're going to delist next year. And I think the shareholders, because these are foreign shareholders, they want out of SIM now. I don't think they're interested in the country anymore. We know that there have been fallouts previously with the shareholders that saw George Manyere and they're leaving and getting get backs. But that was the end of the story. After 4 years, they've not done anything. And that's not how holding or investment holding companies are supposed to be structured. If you're an investment holding company, you're then supposed to grow and get assets in, and then, but then these ones didn't grow. And I think, like I said, both RTG and African Sun are available for sale investments at the moment if you want to speculate on them.
And
I got that.
I think we should.
I think so too.
It's time to buy distressed assets.
So let's talk about the other interesting product that was launched this week, Mombe Mari Unit Trust. A lot of people are skeptical about this structure. Tinashe.
Listen, I don't have anything wrong with Mombe Mari launching. I just think it doesn't make any sense. Having cows as your underlying assets, in theory, it makes sense as an initial investment when you launch your index funds with units. Cows grow, they might breed, they might not, they come and they die. You can't compare using cows as the underlying as compared to building an index on shares. I personally don't think it makes sense, I don't think it's sustainable, and I don't see how they're going to fund this in the long run. Please guys, tell me I'm wrong. Am I wrong?
Yeah, I do think, I'm more of a fan of funds that are with underlying as exchange traded assets. Unless it's a PE fund, but even with a PE fund which invests in private companies, at least we have comparables. You can use multiple valuations and then get a valuation for a private company.
What do you compare?
I can't use the multiples on cattle.
But you can. So
No,
this,
every cow is different. That's not that easy.
The breeding capability is different.
It's the
Less
difference
than-
between looking at a financial statement and going to every
But
single
which is
farm.
why they partnered with a cattle breeder for the purposes of that.
Yeah,
And all the evaluations are linked to CC cells. And anyway, the Harare farm is just next to CC cells, so it's easy for them to get a value of that. People eat beef. How many times do you eat beef? Every day. There will always be a market for cows.
Yeah.
Like I think it's been noted, cows are wealth, a symbol of wealth.
yeah.
I think it's a unique product which probably just needs a little bit more marketing for people to be able to understand that you can never go wrong with beef.
Right.
And especially if you've got professional breeders that are there to help you breed the cattle. They've got 5,000 cattle, so you multiply that by the units of beef, that's like money that's there. And there'll always be a market for beef. That
Yeah.
market has never died.
I get the multi-breed, and the one good point you brought up, right, is the fact that it's a brand new product, it's innovative, and it's different, and that's what Zim actually needs at this moment. But I still don't think it's a very sustainable kind of product to bring forward.
Why do you
Especially
think
now-
so?
Measurability,
The
comparability.
cows
How do you measure?
is a
how do you
living
measure value?
animal, you really can't.
But
How
what's
do you-
different to shares or like an ETF? It's like an ETF or a unit trust fund. So how is it different? These are cows, these are live assets that's there. So
Yeah.
how is it different?
No, because I'm gonna like, for example, you have underlying of like say a certain number of shares in a certain asset, right? You can't have one share of like a company die while the rest survive. Whereas with cows,
But they're
your
not
underlying
gonna
hope-
die.
if one cow
Why-
dies,
Why? Okay.
your underlying now goes
But
down by
okay,
one.
what if they breed and then they multiply?
So exactly,
Yeah,
it's based on the fact that you hope they breed.
but they will breed. They're cows.
You
It's
can't
a
say-
natural
You can't say
order
they will
that
breed.
they will breed. No,
You
but
can't say
they
they
do.
will.
Cows get pregnant. And besides, the deed said that they've got an AI, artificial insemination program that they're running.
Also, they can
So they just
guarantee.
don't, they guaranteed, and their fertility rates are like at 90% for this Norton farm, 87% for the Bulawayo farms.
Oh, it's
Which
not.
is
Oh,
high,
it's
so
90.
you
It's
know-
90%.
yeah.
It's not 100%. Then.
You can never get 100%
Exactly, and that's the problem.
No, because it's not.
That's literally the problem. Living animals.
You're given for human beings. You can never get 100% fertility.
But we're not using human beings as an
You
animal.
can't put
Yeah, but
90%.
still.
You can't put 90% in your prospectus.
There'll always be a margin of error somewhere. Even on production, you can never get it. There's always a margin of error anyway in anything that you do. So it's not really like.
Like again, I'm not hating on the product. I love the product. I'm just saying it's not sustainable. That's all I'm saying.
Come on, buy some units.
Come back to me. Come back to
and
me
then
in
we'll
2
see.
years and we'll
Because
talk about
the
it.
beef is really expensive at the moment. You know that prices are gonna go up. So 331 kgs, okay, selling beef at what? 700, 800 per kg now. So
Yeah.
you actually then just get more value as time goes by.
Yes, but again, what's the incentive for someone to buy, index shares in Mombemari as opposed to buying generic, with one goes launching
Because
index
if
funds?
you do understand the beef industry, then you would understand that you're gonna get value. The price is still gonna go up. I mean, CC is just next door. They can always sell, and there's, we talked about George once, yeah, and you were saying he sells a beast for like 2,500, and then he sells many beasts. Oh yeah, we can argue on many beasts, but then he sells at 2,500,
Right.
which is good money when
Yeah.
you sell a beast. So there is value in cattle ranching. So there is value also when you do your beast. As opposed, you don't have funds, so you can't own cattle, but you
Yeah.
can buy units of the cattle farm.
And then,
And
so
then
from
you-
my perspective, from someone buying, units of this index fund, it's the same as buying units in any other fund. So
to
wow.
diversify
so
your
why would-
portfolio, why would you then
Oh.
just say, yeah,
Also, my
just buy-
portfolio has Delta and Aptus
Yeah,
and
diversify,
cassava,
you don't
and
have
now
cows.
put cows in.
Yeah.
Oh, okay.
and
But-
then
but
you'll be
the thing
able
Oh, okay.
But with underlying shares, we're limited by the standardized pricing. With cattle, you're not.
Yeah, you
So
see that.
your breeder can actually go in the
I
market and say,
prefer-
I can sell this for
I prefer
2,500.
standardized pricing.
It's an advantage that people can't quantify the value of the cattle.
I personally prefer standardized pricing towards speculative pricing. Whereas
But that's
you can
not
see a
really
cow.
speculative pricing. So what's the average price of a cow? It's the normal Mashona cow. If you're to go to the commercials, how much would you buy a cow for? So it ranges. If it's a drought year, it's cheaper. If it's a good year, then that's more expensive, like $500.
That's what I'm talking about. The fact that if we look at the same cow, the price you pay and the price Phileas would pay are two different prices.
No, but CC cells have got a structure. I mean, it's been there for a long time since, So if they're linked to this fund and they do the valuations for that, which means there's nothing wrong with the valuations of the price of the cow.
Yeah.
It's at market.
Also, it's just speculative, but just based on one speculator.
Okay, that's it from us today. Do catch us next week. Make sure you subscribe, like, and share this episode.
Thank you.
See you guys next episode. Make sure you like, share, comment, subscribe.
Please do.